Okay, let's be real. In trading, everyone's searching for that one thing, right? That edge, the secret weapon, the silver bullet that's going to cut through all the noise and just find profit. Well, today, we're going to dive into a strategy that promises to be exactly that. But the big question is, does it actually work? But before we even get into any kind of strategy, we have to face this one really tough number. There was a huge study, and it found that a staggering 97% of day traders lose money. Think about that, 97%. It's just a brutal statistic, and it hangs over this whole world of trading. So that just begs the question, right? What in the world are the other 3% doing? How are they pulling it off? Are they just smarter, luckier, or, and this is the key, do they understand a set of rules that the rest of us don't?
All right, to even begin to answer that, we've got to get into the core idea behind strategies like the silver bullet. And it all starts with this concept of smart money. You know, the big institutions, the banks, the players who have enough capital to actually move the market.
You know, this isn't a new idea. It actually goes way back to a legendary trader, Richard Wyckoff. He had this brilliant way of thinking about it. He said, stop looking at the market like it's this chaotic crowd of people. Instead, imagine it's all being controlled by one single super intelligent entity. He called it the composite man. And this entity, it doesn't just react, it plans and executes moves. And our job as traders is to figure out what it's thinking and ride its coattails. So fast forward to today, and Wyckoff's composite man has a new name. The Interbank Price Delivery Algorithm, or IPDA for short. The theory here is that price movement isn't random at all. It's engineered. It's delivered by a massive computer program. And this program, it's designed by the big banks to do two main things: move price from point A to point B and to seek out liquidity. And you know what liquidity usually is? It's our money. It's the money of retail traders. And this right here shows you the huge difference in mindset. Look at the retail logic. We're taught to chase breakouts, right? To buy when things look super strong and to put our stop losses in all the obvious, predictable places. But smart money, they do the exact opposite. They are selling into all that excitement. They're buying when everyone else is panicking, and they are actively hunting for those clusters of stop losses. It's like one side is the fuel and the other side is driving the car. Okay, so if that's the game, how do you play it on the right side? How do you actually trade with this smart money logic instead of against it? Well, that brings us to the playbook, a very specific strategy designed to do exactly that. This strategy is called the ICT Silver Bullet, and it was created by the Inner Circle trader. Now, the really cool thing about it is that it's a time-based strategy. The whole premise is that this giant market algorithm doesn't just move whenever it feels like it. It's most likely to make its big, decisive moves during very specific, predictable one-hour windows every single day. So what are these magic windows? Well, the first one is during the London session, bright and early, between 3 and 4 a.m. Eastern Time. This is often when the algorithm kind of sets the tone for the whole European day. Then, the second shot you get is during the New York morning session, from 10 to 11 a.m. Eastern. This is usually after all that opening chaos has settled down and a cleaner move can start to happen. And the last one, the final window of the day, is in the New York afternoon, between 2 and 3 p.m. Eastern, right as the day is starting to wind down. All right, so let's say you're in one of those one-hour windows. What's the checklist? It's actually pretty straightforward. Step 1, you wait for price to take out a recent high or low. That's the liquidity grab we were talking about, the stop hunt. Step 2, you need to see a really strong, aggressive move in the other direction, a move so fast it leaves behind an imbalance, what's called a fair value gap. And then step 3, the entry. You just wait for the price to pull back a little bit, right into that gap, and that's where you get in. Your target? The liquidity on the other side of the move. Simple. But look, having a great entry signal is maybe half the battle, if we're being generous. This strategy, just like any real professional approach, is built on a foundation of super strict risk management. And honestly, this is the part where most traders completely fall apart. And the rules are absolutely non-negotiable. You risk 1% of your account or less, period. You take one trade a day, max. That's it. Win or lose, you're done. Your stop loss is placed in a very specific spot. You're always targeting at least 1.5 to 2 times what you're risking, and you laser focus on just 1 or 2 markets like the NASDAQ or the S&P 500 so you can actually master them. Okay, so this all sounds pretty good, right?
You've got a solid idea, specific times to trade, a simple checklist. It seems foolproof. But what happens when a strategy that has been working like a charm just stops? What do you do then?
And this isn't just a hypothetical. We came across this post on Reddit from a trader who was absolutely crushing it with this kind of strategy. I mean, a 70% win rate? Can you imagine? And then, bam, suddenly it was a total disaster. And that feeling, that pain, I think almost every single trader knows exactly what that's like. But the thing is, the top response to his post was, well, it was kind of profound. The insight was this: your strategy didn't break. The market broke. The entire environment, the conditions you were trading in, they changed completely. And this is where we get maybe one of the best trading analogies I have ever heard, seriously. Someone replied, "Your strategy was a high-performance surfboard, and it was built perfectly for the massive trending wave of the last market cycle. But now the market is a choppy, sideways skate park, and you're just standing there, holding a surfboard, wondering why you can't grind a rail with it." It's just perfect.
So, what's the pro move here? It's not to get angry and snap your surfboard in half. No, the pro move is to recognize that the weather has changed. You put the surfboard away for a while, and maybe you go grab your skateboard. The real skill isn't just mastering one tool. It's building a kind of filter, like your own personal weather report, that tells you when the season is right for each of your strategies.
And that really leaves us with the big takeaway from all of this. The goal isn't to find that one perfect, unbreakable strategy that works forever, because that doesn't exist. The real goal is to become a master observer of the market environment. So the question you need to be asking yourself isn't just, is my strategy any good? The much more important question is my strategy